Friday. Monday, December 8th. Big week. FOMC week. Everybody's been talking about it. I don't know if everybody hasn't been talking about it. Anybody who's a talking head has been talking about it. But anyway, that is what's going on. And market's pretty much flat most of the night. And then they picked up some steam about an hour ago. We were kind of gapping down most of the morning, and we kind of perking up a little bit here. YM, Dow up about 25, ES about 10 and a quarter, NASDAQ up 72 and change, and the Russell up 12.4. Gold been basically flat, as well as silver. And bonds, surprisingly, not really catching a bid at all. Down a couple of ticks this morning to 115. So as far as, and Bitcoin also caught a bid overnight. It didn't look good through the weekend. Had some problems. Got down as far as, look at the hourly. Did dip back down under 90, and we are back up over 90, currently up about 1,300. 91,747. Not a hell of a lot going on, quite candidly. I was even looking at some charts. Nothing is really piquing my interest much, other than the Russell 2543.90. But we've had that marked for a while, that area, so I'm not going to mark it again. But 2543.90 is an R2. Have not been able to break through that area. Touched it back last week. Touched again later on in the week on Friday, and was not able to break through there. And as far as the downside, there's really nothing. I mean, if we sell off, I'm not going to catch a knife. Same thing with the ES. The only spot of real interest today is going to be R2. 6909.75. We also have that big round number, 6906.50, so to speak, marked as well. But we'll be watching that area today if indeed we get up there. I'm expecting another slow, choppy, sloppy day. And that is really about it as far as like the bigger, broader markets. I'm not really finding anything remotely interesting to do. Volatility is pretty much gone. I mean, it is up a little bit today. The VIX is at 1624, up about 83 cents. But, then again, not really any there. Then I switch gears a little bit and then start looking at some underlyings. And it's pretty much the same kind of, underlyings that have volatility left in them as we had last week. We have Oracle. If you're looking at anything, you have Lululemon. You have Adobe. You have SanDisk. There's Micron as well. I mean, even if you want to take a stab at silver, SLV really has never been, unless you're just going to go long or just go short, doing anything from a volatility perspective in there, has never really worked out for me. So I pretty much stay away from it. And then there's NBIS, and there's also you got IBIT, which may be interesting. But again, with it being an ETF, ETFs are very hard to do volatility plays, in my opinion. I tend to stay away from them. And then you have Nike kind of at the end of the gauge here, and then I'll throw ClearSpark out here, for maybe selling some puts. But that, outside of that, folks, it is slim pickings in here for doing anything from that perspective, from volatility plays. Outside of that, you're really going to have to do directional. And, with that being said, that kind of puts me in a place that I don't normally like to be in, because I always kind of like to have a good mixture of volatility plays with my directional plays. It's just that's not really feasible right now because volatility just isn't there. And it's only really in a few underlyings. And many of these that I mentioned, Oracle, the Adobe, are all earnings bound this week. I know Oracle, I think it's the 10th. So, Wednesday that they're gonna have earnings. I think Lulu is this week. They're on the 11th. Adobe as well. I think it's another one. They're on the 10th. SanDisk is kind of past that point. There's still a lot of volatility in there, but that one's tough to play because it moves. And then last but not least, we have Micron, which is the week after. And that's kind of it. And it's I don't like to just keep going over the same sort of things and just for the sake of broadcasting. So this is going to be a pretty quick session because I do have a couple of things that I'm looking at from a chart perspective. I went through all of these stocks again last night, just kind of rumbling through them, different time frames and whatnot. None of them are really setting up in a way that, a lot of them are in a weird spot, in my opinion, in that, look, as much as it seems like maybe you would want to short these, I don't think I should, based on the market right now. I just don't think the timing is right. Not that I'd be able to time the market anyway, but, talk to me 2 weeks from now, and then I might have a completely different perspective on many of these as far as shorting them. And I'm talking like the SanDisks, Microns, and some of these that have really kind of took off, got hit, and now are rallying back. But, as far as right now, there's none of these. The only stock, in my opinion, in here that looks fundamentally like ripe to short is Netflix. And I went over that one Friday. And I continue to like it short, even if it has a decent bounce day. And as long as it doesn't break over 110, that's kind of my line in the sand. If it breaks up over 110, and I will mark that up here for Netflix. If it breaks over 110, and that is right here, then my short is off the table. And my target, as I've been saying down here, is about $90. So that's where I'm sitting with Netflix, and that is kind of my strategy. And then, how am I playing it is I'm just doing calendar spreads in Netflix, NFLX. I was looking at February. I was looking at January. The calendar spread that I like more now going forward, and you can see I'm already in one, and I'm short some 105 calls. I'm actually long some 110s, but I like the 195 March, February calendar spread, and this is the one that I like. And you can see I'm in a number of different things, but this is the one that I particularly like right now. And I think it's even a little bit better of an opportunity if Netflix has a bit of a bounce day. You know, it's up a couple of bucks. It'll put you in a good spot to buy that a lot cheaper. And it's not an extremely risky trade. And from a probability point of view, it's about a 50-50 shot, right? I mean, it goes up, you lose, it goes down, you win. It's a pretty simple play. All right. And so that's kind of the story on Netflix. And that's really the only stock that, that I play and trade that I like here short. Other than MSTR, I could talk about this one until I'm blue in the face. I just don't want to go down that road. I'm inherently short on it. I'm short it. And that's that. I'm not going to rehash that one. But then looking at some of these other names in here, I came to NBIS again, which is Nebius Group. Nebius. And it's interesting because it's off today a couple of bucks. It's down about $1.50, but it has had a pretty decent run. Let's just bring up the chart. And I think Friday, it had a pretty decent move on Friday. I mean, here's the hourly. It had a pretty nice run. And the way I'm playing this one is I'm looking at about $80. It's like 78, but I'm looking at like $80 down here as kind of like a bottom. And I'm looking out above these highs all the way up here. And I'm going to change this to gray. And this is the area I'm kind of sitting in. And what I'm doing is I'm looking to do, and I already have one trade on, is I'm selling puts down below here, basically below 80 and below, and above 140. And the reason is because volatility in here remains elevated. And it's really a stock that I don't know. I'm kind of indifferent. Like, I don't really think I should be long, and I really don't think I should be short, although it may have some rips to the upside. I mean, it's been known to have significant rips to the downside. And with that being the case, I would rather play the middle at this point than be directional and just maybe sell puts. And I did go out to January. I'm already in something. But I have no problem adding on to this. But I do like, something like this, like a 75.70. And then we go out to January and we're looking at, $20, $21 move. And then calls above 140, you can do like a 140, 145 on a trade like this, and we bring in $1.75. Now you're about 40 days out. You're under 40 days now, actually 39. But you're only using $300, and you're bringing in almost $1. You could probably do this realistically, that's the mid price. You could probably do this one for $1.70 easily. And a trade like that to me is really, that's a nice play for a stock like this that moves the way it does. And you're kind of, you're in the middle here. I don't know why that's like that, but anyway, you're right in the middle here, and it kind of relates back to the chart kind of mixing a little technical analysis with a little trade with a little volatility. So kind of get a little bit of all worlds there. So that is that on NBIS. And we've been doing pretty good on that one. I think this is now this will be my third trade on that this year. And I've just traded that recently, so within the last 2 months. And so I've been happy with how things have turned out on this one and how I've traded it. Yeah. And then that's about it, because, again, everything else, with Micron, all right, volatility's up there, and it is historically high, and I'm already in something. But I'm just not sure if now is really the time to play a lot of these bigger tech stocks. As much as they look like they've kind of recovered themselves and kind of coming back, there's every inkling inside of me says, be a contrarian, because it's kind of what I normally do. I just can't bring myself to it because these stocks just look too incredibly strong. And I don't want to be on the wrong side of these when they do, in fact, do what they do, which, again, if it continues to go and rip up, I get ripped. My face gets ripped off, and it goes and pulls back. I get my face ripped off, and you can't even make a play in the middle because they move so much. So anyway, that's why I'm just kind of sitting on my hands with many of them. I think, like a lot of folks are with these stocks, because quite honestly, it is a little nerving to me to take a position in a stock when it's at an extreme one way or the other. So anyway, and that is really it. I wish I had more, but I don't. I think we're all kind of just sitting around waiting for FOMC and the market to digest that. And there you have it. And so I wish I had more, but for the sake of being honest with everybody and upfront, there's really not a heck of a lot else going on. And so that's it. And so, have a good trading day today. I would recommend, doing as little as you possibly can, because I do think it's going to be a relatively choppy, lackluster day, and see how it goes. And I will see if you can get that Netflix and that NBIS. I mean, those are the two I'm going to be working on today, and we'll see how it goes. All right, and then hopefully I will be back